Hello, everybody. Good morning, good afternoon, good evening, wherever you are in the world. My name is Leoncio Montemayor. I am a project manager at Solarplaza, and it will be my pleasure to moderate and host this webinar on PPAs on the horizon, the opportunity for Italy. I was just seeing, and it is quite an international group that we have here. I think we have over 15 or 20 countries from all around the world. So hope wherever you are that the weather is as nice as it is here in Rotterdam with clear skies and sunny and a lot of sun. But it is my pleasure to introduce the two speakers for today: Peter Osbaldstone, a research director at Wood Mackenzie, and Dario Gallanti, partner at Our New Energy. So without further ado, let's just get started on the webinar. So this is a little bit of the agenda for today. So I'll start with a brief introduction. And then Peter will be taking the floor first, and he will be talking about the opportunity for Italy. So putting Italy on a broader European perspective and why it is an interesting market now. And then Dario will speak more on the specifics of for the Italian market, the PPA market over there, make some comparisons with the Spanish and other Iberian markets. And then we'll finish with the Q&A. So make sure to stick around for that. And then we'll finish the webinar. We are doing this webinar as a prelude to one of our conferences, Solar Market Parity Italy, which will be the 18th of June in Milan. We will be having more than 200 attendees from investors, developers, and manufacturers. This is a follow-up to a conference that we did last year, so make sure to go to the website for more information. These are some of the sponsors that we currently have. We are still a few months before, so it's still in time to partner up for the event. If anybody wants to partner for this event, feel free to contact Eduardo. His contact details are on the screen, eduardo@solarplaza.com. Basically, the program will be talking about the utility scale subsidy-free market parity projects in Italy. So some of the key topics will be wholesale electricity prices projections. Of course, this is vital. Auctions, if they come, we're still pending on that. Greenfield development and agricultural land. So what is the impact there? Everything you need to know about PPAs, probably the hottest topic in Italy at the moment. Does merchant make sense? Grid considerations and many more topics. These are some of the speakers that we currently have. If you want to be involved in the conference, please contact me. Leoncio@solarplaza.com. So for those of you who don't know Solarplaza, our mission is to positively impact the world by accelerating the sustainable energy transition. We were established in 2004, and we've organized more than 110 events in 35 plus different countries. So some practical notes before we get to the good stuff. If you have any types of technical issues, please use the chat box, and my colleague Marco over here will help you with it. If you have questions, use the question box. So there's two different boxes. So questions for the speakers that we can later take on during the Q&A. And the presentation slides and the recordings will be available afterwards for everybody to enjoy. I'll first start by introducing Peter Osbaldstone. He's a research director at Wood Mackenzie. He has been for more than 11 years researching and analyzing the European gas and power markets. He worked previously at the National Grid, and he has a master in energy and environmental technology and economics from the City University in London. So Peter, I will hand you mouse and keyboard controls, and the virtual floor is yours.
Thank you, Leoncio. Hello, everyone. Just while we transition our slides here. Great. So today I'm going to talk about the background of the European power market and its development over the coming years. And I'm going to use that to set the scene for our expectations for Italy and the role of renewables and their development in Italian power supply in particular. So we'll start by looking at the overall European power supply mix. And there are some key defining factors in this market over time. And to pick those out in high level terms, those are significant downward pressure on coal and a major reduction in coal's contribution to European power supply as a primary means of decarbonising the sector. Underneath that in the chart, you'll also see with regards to nuclear, our view is that we see a steady decline in the contribution of nuclear power to overall supply. There are issues around the existing fleet suggesting that we won't see as much power from reactors already connected to the system. The policy background is not particularly supportive in many markets across Europe. In fact, it's in a lot of markets, it's very negative with respect to nuclear power. And it's so difficult to deliver new capacity into European markets. And the recent experience of the UK and its various new build partners, or prospective new build partners, I should say, highlights that very well. We have substantial sustained growth in renewable sources, both wind and solar. On the wind side, much more in the way of offshore wind emerging over time. We'll come back later to look at how costs of delivery for those renewable technologies change over the next few years. And in the background to that delivery of new capacity, there is this trend towards auction-based allocation of support and an ongoing movement towards subsidy-free renewables, very much becoming a reality across European markets. And again, that's an issue I will come back to in a later slide. In the middle of all that, shown in the grey on this chart, we have gas generation. And whilst coal as a heavier, more carbon intensive fuel is under significant pressure, we see gas's role being sustained within the market through the longer term as a means of providing replacement supply in the absence of retired coal against reducing reducing nuclear production. But still there's pressure on gas in the longer term as demand remains relatively stable and continued pressure from new renewables is seen. So a little bit of a deeper dive into that supply mix now. Firstly, looking at coal, here's our view by market of coal-fired power supply. And this is one of the contrasts in our view now to the ones we might have held 2 or 3 years ago. Now, there's much more in the way of policy-led coal phase-out across major European coal-burning markets, such that Germany and its withdrawal from coal in 2038 marks the end of coal-fired power production in northwest and southern Europe. There's still coal there in the overall EU power mix. You can see the importance of Poland and the prominence of Poland in the longer term, and elsewhere, particularly in South and Eastern Europe, coal is retained within the power supply mix through until 2040. In terms of supply shares, at 2020, we see 36% of power supplied by renewables, rising to over 51% by 2030. And at 2030, we also see about 750 terawatt hours of wind in the market and 300 terawatt hours of PV. That represents about 100% increase and a 35% increase respectively on 2018 levels. So significant growth. In the meantime, I've also shown a supply mix share or supply share for gas in this chart. And that really emphasizes the point I made earlier about gas filling the gap left by other retiring sources and remaining relatively stable around 20% of supply through this outlook period to 2040. A little bit of a deeper dive now on Italy. And many of the themes that we saw at an overall EU level can be translated into our outlook, our base case outlook for Italian power supply. In Italy, we expect coal closures to be complete in 2025, whilst gas remains a major source of supply throughout the period to 2040. Wind and solar currently account for around 25%, just short of a quarter of Italian power production, or about 21% of demand. And if you add hydro and thermal sources to that, that brings the total contribution of renewables in Italy to around 40% at present. Now, there's an interesting shape in the development of renewables in Italy, which you can see on the right-hand side of this slide in the second chart we're showing here. And in that, we see the contribution of wind and solar in terms of their share of overall supply almost doubling between 2010 and 2012, when we saw that massive investment in solar in particular in Italy. Now, in the 5 years since then, beginning 2013, in contrast, very little development. Overall, that share has lifted by 2 or 3% over those periods in overall supply share terms. But then again, moving forwards, looking at the market conditions, by 2030, we assume a continuation in the short term, beginning in the short term, of substantial growth in wind and solar. And we expect to see around 55% of power supplied from renewables, around 50 terawatt hours of PV. That's 120% growth on 2018 levels, and 30 terawatt hours of wind. That's 65% up on last year's levels by that 2030 period. Imported power continues to be a major feature of Italian power supply in our view, the Italian power supply mix in our view, with French nuclear therefore and wind and solar production from France and other markets being a substantial influence on the market, and also competitive gas helping to drive those flows into Italy over time. So still a strong link there to the change and development in other markets being felt in Italy, with that import requirement sustained through the long term. So against that background, I mentioned that we expect renewables growth, solar PV growth in particular, to re-emerge in the market in the short term. The government recently announced ambitious climate energy targets in Italy for 2030, part of the overall target building process member states and the European Commission are going through at the moment. And solar will play a key role in achieving those ambitious goals, with a target of 75 terawatt hours in that view by 2030. That's up from 25 terawatt hours we see in the current market. So those of you paying close attention will notice that is going beyond, at the moment, our base case view. So we do think there are challenges there. Just simply having these targets in place does not mean that new capacity and that supply from solar in particular will be delivered. Still work to be done. Now, these targets have promoted a program of competitive auctions, and these are now being launched in the market. And we see that those being a key driver of new capacity additions over the short to medium term. Both solar PV and onshore wind projects will be eligible to bid in the auctions, and for larger scale projects in particular, we see there's a key enabler to new investment in Italian renewables. In initial auctions, in the initial auction rounds, at least we expect wind to prove more successful than solar, despite the fact that PV is likely to have a cost advantage over onshore wind. And that's because we see rules preventing the construction of utility scale projects still in place in Italy. So that's blocking PV developments on agricultural land, and that limits the number and scale of potentially competitive solar PV projects that can enter the market. So missing out there on economies of scale, in particular, that would allow PV to outperform onshore wind. Now, we see it being likely that these rules will be relaxed, and in fact, it's essential these rules are relaxed to enable Italy to achieve its 2030 targets. I've already mentioned that we see that being a stretch at present. And the outcome of the first round is likely to add additional impetus to that change. And when that change comes about, that leads to increased volumes of solar PV being delivered into the market in later auction rounds, and also lower prices being set in those auction rounds as a result. So we see the market in the short term delivering around 2.5 to 3 gigawatts of new PV capacity per year through to the early 2020s. So setting now that market background against the broader European outlook. So competitive auctions in the last few years have become pretty much the norm, the primary means of supporting growth in utility scale solar PV across the region. High levels of competition under those arrangements, coupled with massive reductions in costs that the global solar market's delivered, with PV module costs down over 90% between 2008 and 2018. Now that's seen the price of solar power fall significantly since the beginning of the decade, positioning solar far better to compete against that competitive auction background. Our solar costs in Europe we expect to continue falling, and there are several influences at work here. A slowdown in the Chinese solar PV market, freeing up additional supply for other areas of the global renewables market, the ending of minimum import prices being applied by the EU to Chinese produced modules, and also the development of more effective module technologies in general, meaning that solar is becoming ever more competitive. But what about realized prices? You can see the performance of wind and solar through competitive auctions in Europe on the right-hand side of this slide. And in Germany and France, two of the continent's largest solar markets, we're now consistently seeing auctions being cleared at prices below 50 euros, with some bids being registered below 40. So that puts the cost of solar well within the range of both outturn and forward wholesale power prices in large European markets, and means that subsidy support payments to new generators are falling close to zero. So this in turn leads to the subsidy-free period that we'd expect to be so important in forming the future development of wind and solar in power in European power supply. So let's look at those market conditions in a little more detail. So costs have fallen so far with respect to the provision of new renewables that large-scale solar projects in many markets can now be developed economically without government support. By 2023, we expect the long-run cost of electricity, the levelized cost of electricity of utility scale solar in most markets across Europe to be around 40 euros. That's well below the break-even costs of almost any other technology, certainly very competitive against wind technologies. And you see here that we expect significantly more in the way of cost reductions offshore than onshore, but solar remains more competitive and well below the cost, the representative cost of new build CCGT, which we see rising over time. There's an important link there to our view of long-term power price formation as well. As a result, we expect a wave of subsidy-free projects to be delivered into Europe. And in fact, what we're looking at here on the second chart on this slide is a breakdown of the subsidy-free solar project pipeline in Europe, which is totaling some over 11.5 gigawatts at the moment. Only around 300 megawatts is operational, so the potential is huge here. And southern European markets, Spain at the moment in particular, is leading that activity. Italy plays a relatively small part, but the background to the market is such that we would expect that to change over time. And finally, prior to my closing remarks, I just want to have a look at our power price background. So despite the ability of solar and wind to be delivered at lower costs into Europe, we continue to see support for European baseload prices. And here in this chart, we're showing a selection of those. Higher wholesale power prices are supported by rising costs of coal, gas, and carbon. But the important point here is any influence from coal is only good for as long as coal is allowed to generate in various markets. And gas throughout the period will continue to play a key role in price setting, particularly in markets like Italy, which remains a substantial part of the power supply mix. So the higher costs of gas feeding through to higher power prices are supportive of that background, where we see continued investment of renewables at little or no additional subsidy payment. Despite these higher prices, clean spreads for even the most modern of gas-fired generators will remain narrow, and where it can run, modern high-efficiency coal burners will sit ahead of gas in the merit order. So there's some interesting dynamics going on there. Italy's position as a net importer is also significant. That sees, in our view, a continuing feature of cost influences from other supply markets. And so developments such as nuclear closure in Germany, later coal closures, the level of nuclear production in France are all material factors for price setting in Italy as well. In the early 2020s, you'll see here there's quite a bit of shape to our forecast. There's a spiking up around 2023, much higher levels of pricing coming through in the market. And there we're seeing the dual influence of tightening gas and carbon markets. So a little bit of softening in prices in the short term, followed by quite a marked ramp up. So something to look out for there. And finally, in closing, I'd like to just recap on three main points from my presentation. So the Italian power market is entering a period of substantial and far-reaching change. And that's set against the European market background is also reshaping. So the period between 2020 and 2030 is set up to be really very, very interesting. Solar is ideally positioned to be a major part of that change. But renewables, particularly solar in Italy's case, must continue to adapt to changing market conditions, adapting and developing subsidy arrangements and other measures, most notably PPAs, to support the delivery of new capacity. And with that, I will finish.
Thanks a lot, Peter. Great presentation. I mean, my first initial impression is that it seems like things are sort of stacking up for at least for the Italian energy sector in terms of costs and European power prices. So great. We'll follow up with more questions afterwards. And just as a reminder for everyone, please do send your questions through the question box so that we can see them and then ask them to the speakers at the end. So moving on, I would like to introduce Dario Gallanti, a partner at Our New Energy. He has a previous experience in Deloitte, and he was the originator, general manager at Danske Commodities for more than 4 years. He also coordinates the Energy Market Task Force at the Italian Wind Association, and he has a master in industrial engineering focusing on energy and sustainability management from the Politecnico di Milano. So Dario, now I will cede you controls, and the floor is yours. Thanks.
Thank you very much, Leoncio. I hope everyone can hear me well here. Thank you for the invitation. First of all, we are very happy to share our experience with specific focus on the Italian market. And thanks also to Peter, who I think did a very good presentation showing the fundamentals of the market, which are obviously very important also for the for the long-term strategic decisions. So as already presented briefly by Leoncio, as Our New Energy, we are an energy advisory, PPA advisory firm, and we are, let's say, we are closing the gap between the different, let's say, the different players in the market and the energy markets. So we believe that the energy transition will be driven by a larger plethora of players on all parts of the value chain, but they are all, the common part is that all of them will rely on the energy market as a main source of revenues for the investments. So just to give you some numbers, we are 7 employees, and we have closed during 2018 our first gigawatt of transaction. What we mean by that is that we have been assisting the generation side in structuring, originating, and negotiating the product to be signed. Just a couple of background transactions regarding this first gigawatt of transactions we closed. You might have heard of us for the first market parity PPA in Spain, which was a 10 years PPA now already 14 months ago. And after that, the market has proved to move very, very, very fast. Among others, we have also closed the first market parity deal in Portugal on a 219 megawatt PV plant under a 20 years PPA in a one-of-a-kind transaction that was also made public. We have assisted the closing of the first 10-year fixed price in Italy, which we will see in a second later in the presentation. And we are closing the first corporate PPA, which is peculiar in Southern Europe, which is peculiar for being the first direct agreement between an industrial and and an asset. So between an IPP and an industrial operator, without any sliver in the middle. So in the presentation today, I would like to bring you our experience coming from these gigawatt of transactions we have assisted in the last year and a half. And I'm more than happy to hear your Q&As on that. So first, I would like to compare a bit the Spanish and the Iberian market to the Italian one. So we are very often asked to what are the differences, the similarities in these two markets. And I've tried to sum up in one slide, which was a quite difficult exercise, the main differences we see at least. So first of all, as we said, as we have seen, in the market, in only 12 months, we have witnessed 2 gigawatts of solar market parity deals closed in Iberia only in 12 months. We expect, sitting on many tables, we have more or less a good idea of what to expect for 2019, and we expect 2 to 4 gigawatt of additional PPAs in Iberia for the current year. But also on the very positive side, what we have witnessed is also that financial institutions have developed their know-how, and they have also been able to give structures with up to 80% leverages under non-recurrent project finance schemes. Also, what we have witnessed is that Iberia, Spain in particular, but the same applies to Portugal because eventually it's the same, is basically serving as a playground and a workbench for all the long-term product development and all the solar, and I would say in general renewable investments in all Southern Europe. So all, and I will tell you more about this in a second, but all the stakeholders we have seen in the past active in Iberia are now moving to Italy. So as of today, domestic utilities and foreign traders still represent a large proportion of the off-takers. And again, also on the investment side, we have seen a lot of interest from foreign institutional investors. which we have also assisted ourselves. So the same in Italy. What do we see at the moment? So we have seen, yes, a limited number of transactions so far until today, compared to what is the interest in the market on all the sides. So both on the, let's say, on the sales side and the buy side. Yet an extremely quick development of the offerings in terms of product, tenants, and structures. What we see on the fundamentals is that some of the fundamentals are the same as Spain and Iberia because of the abundance of the renewable sources, an established development sector, and high power prices with the possibility of upsides. At the moment, unfortunately, there are only few attractive authorized projects, and obviously also compared to Spain, the average project is much smaller in size. At the same time, we see that many investors, many are the same that we see in Iberia, are securing the developments or the co-development contracts with the development sector that is indeed witnessing a renewed turmoil from back in the days. And we see on all transactions that the business plans and the approaches are deeply inspired from the experiences of other markets. So for these reasons, as I said, the players are just replicating the success of Iberia, the successful business models, the products and the strategies in the Italian market. So if I had to, in really 5 main points to describe the Italian market, the energy market, I would describe it with the following ones. So the first is that the Italian market is, as many of you already know, is divided into 6 main market areas. So each hour of the day, every area determines the clearing price, which we call a zonal spot price, which is the energy price paid by the production assets. But actually on the screens, a unique national price, being the weighted average on volumes of the different zonal prices, is traded. And this PUN, which is, by the way, the price which is also paid by the demand, is all, let's say, is the main price for the index of PPA, leaving the zonal spread on, let's say, on a separate part of the PPA, meaning bringing, in an already complex product as the PPA is, a further level of complexity. So at the moment, as we said, the screen trades the PUN, and you have to take care of managing the regional spread. And Italy, in general, has shown to have a much more complex balancing system with many changes of regulation over the last 4 years, as many of you know already. And this adds another risk factor, the PPAs. Last but not least, for these reasons, it's very important to consider all the, let's call them externalities or opportunities when choosing the location of the asset. So it's not just about irradiation, there is more to be considered. So just a very brief introduction about the prices and the liquidity along the curve. So in general, without focusing too much on the price levels, because the reality is that in Italy, the forward market is still very liquid, with liquidity, real liquidity only in the 2-3 years ahead max. What we see is that the prices of the forward markets are higher than Spain. And this is enough to compensate for the, let's say, on average, lower irradiation level when it comes to solar, and this makes, and this helps to make the business case very attractive. As I said, market platforms as of today, such as AX, just to mention one, they settle future contract up to 6 years, and they are planning to extend to 10 years. The reality is that in Italy, as of today, there is again, limited liquidity. The good news is that even though the Italian liquidity has proven to be extremely low on the future products so far, the more PPAs will get signed, the more a long-term index will develop. And this is not just academy, it's not just theory, it's actually practice. So one of the things we have witnessed as well is that starting from, let's say, Q2 2018, several terawatt hours of energy have been registered on the 2024 product in Spain. What does it mean? It means that as soon as the off-taker closed the first PPAs contracts, they were then going to the market platforms and creating the long-term price index to hedge those volumes. Again, I'm showing this graph is only settlement prices that we could see last week on AX. Again, this is to be taken carefully because being settlement prices is not the final trade price. So what I would like you to retain from this graph is only the, let's say, the delta part. So the difference between the two curves, because actually this is what we see on the energy markets, but this is also very much reflected on the PPA product itself. So we have tried to put in one slide which ones have been the proper market parity transactions in Italy so far. And you will see a number of them, with Octopus starting the case in 2017 already, and probably and there are only the last three of the table that are long-term ones. So as I said, on our side, we advised on the closure of the last one, which was the first fixed price 10 years. And I would say the NGC and the Canadian solar in particular are those that serve now as a reference for the future ones come. And what I also would like to stress is that also in Italy, just like in Spain, we saw that traders and utilities have proven to be the first mover in the PPA markets on the off-taking side, therefore signing the large majority of 5-10 years, so medium long-term deals. And more players are actually extensively looking into the opportunity of buying, I said, cheap, obviously below market energy long-term. I tried to do a taxonomy of what we expect to be the off-takers, or what we are already seeing now, and what we are expecting to see in the future of type of off-takers. So we divide it into 4 main categories. Again, it's a taxonomy, but it's meant to be general. Obviously, there are some exceptions and some specific cases. So on one side, we see let's call the usual suspects in a good sense. So the integrated utilities, which are therefore active both on the, let's say, on the buy side and on the sell side, meaning they are developing their own assets, but they are also offering PPAs for third parties. I named here some of the advantages and disadvantages of dealing with this type of off-taker. And the main advantage is obviously that most of the time they have strong demand and they are bankable. You will understand in a second why it's between parentheses. And the problem is that sometimes they can be competitors. They are not interested very often in doing the physical offtake, and they have in general very limited flexibility. Then we have the independent utilities. Again, they are fairly flexible on the other side. They offer physical offtake. They can be quite aggressive on pricing, and they are interested in doing long tenors. On the disadvantages side, obviously in general, again, they are fairly less bankable than the integrated ones, and they have limited appetite for this type of long-term products. Then another category is traders. So is pure traders. So the main advantage is obviously that they have contracts in place. They have been managing renewables for a long time, and so they have the time advantage. So quick transactions with them. The main disadvantage, though, is that they prefer shorter tenors. Again, on average. Bankability can be on both parts, as you can see, and the pricing is usually less competitive, and they are more interested in financial contracts. Then there is the one last player, which are the industrials, which we have seen very limited transactions at the moment in Italy. Main advantage, they have demand for volumes. They are it's a developing sector, and they are interested in the physical offtake. On the other hand, they have limited experience of directly interacting with IPPs. They have prior contacts with the utilities, so maybe sometimes it's easier and quicker, actually, not easier for them to go through a middleman to source this energy. And in general, they are slow because of the developing sector. That is it's a new thing for them. Again, why bankability is between parentheses in all this, again, is a general taxonomy, but it's important to say that yes, bankability is fundamental, but I really want to stress this point because bankability has proven to be an attribute of the PPA contract itself, rather than an intrinsic value related to the creditworthiness of the off-taker. Okay, so there are a toolbox of tools indeed to make a PPA from a counterparty that is not, let's say, not AAA, not investment grade, bankable. And that's what we have been, that is also our experience, how to assist the generation side in making these contracts bankable. Just again, from our experience, and again in a very general way, this is a recurrent trilemma that we see among many of our partners, many of the people we assist, where there are basically 4 moving parts into the financial models, and they are very much interconnected one to the other, and obviously the 4 of them have to be fixed at the closure of the PPA for the transaction to go smooth. So obviously, again, maybe we are just short in time, but again, the SPV wants to decide the type of off-taker. Again, very often, or let's say the investor that wants to deal with the right off-taker in terms of credit, but again, there is an implication of collaterals. Also, the off-taker, the same investor also wants a certain PPA structure that maybe is not the best fit for that off-taker, and that PPA structure is tightly connected to their business plan. Then the investor also would like to get the financing from the bank in exchange of what security. And as you see, all the parts are interconnected. There are many balls moving, many moving parts, and so it's it's a trilemma that we have seen very often. We have been very happy to support in solving and closing the transaction. This just to say that if you find yourself in this trilemma, is quite common, and we feel free to contact us, because I think we have some good hints to share with you. Just very briefly discussing with Leoncio, and there seems to be quite a good focus on GOs at the moment, actually on additional revenues. So how does the PPA, how can the PPA take into consideration all possible additional revenues existing? So all those existing now, such as GOs, and those that might exist in the future, let's say capacity market, services to the grid, etc., batteries. So on the existing one, the focus on GOs, what we are seeing, again, just from our experience, we are seeing counterparties willing to securitize longer tenors to provide also new structure. So not just I will buy for one long term, that's it, but with more advanced structures. And we are also seeing direct negotiation with the final energy consumers on the market parity assets. Once again, a graph with numbers. Once again, a disclaimer. The disclaimer is that the geo market is fairly liquid in the spot, but is also non-transparent because many transactions are settled OTC. So one of the references, but again, with a disclaimer, is that for subsidized assets that are traded by the GSE in Italy at the moment, there are some auctions where the GSE sells the volumes, and these here are the prices have been closed in the last 12 months. Sorry, a bit more, 24 months. Again, just to give an idea of not of the number per se, but more of the trend. So of something that 2 years ago could be of very limited interest, also in terms of financials, and now and actually resulted in a very interesting upside. So in general, it is important, and it's the investor responsibility, and we will be happy to assist the investor in that, in capture the optionalities for all possible additional revenues, because you are talking of a contract which is lasting 10, 15, 20 years. Just for very brief key takeaways from my presentation. First, again, on the project developments. So many players on the generation side are now securing the developments or co-developments in Italy. And they have been doing that for the last few months. And we expect a relevant number of AU, which stands for Autorizzazione Unica, so authorization to reach the market already last summer. The second takeaway is that more and more the generation side is also discussing the portfolio approach, meaning that with a smaller average size of the projects in the country, a clustering approach is more and more common. We see more and more big clusters of small plants connected to the medium voltage grid in order to save connection costs, to have lower connection costs. And also we see that time to authorization plays a key role. So having, there is a very clear financial value in getting the authorization early, better than later. Again, one of the things we are seeing is that along the entire value chain, European players who have been exposed to the Iberian case are the first movers in Italy. On all the value chain, we are, I think, a good proof of this concept. So on development side, investment side, financial institution, off-takers, and ourselves as advisors. So obviously, even with the subsidized assets or in the subsidized times, Italy was already the interest of many foreign players. it's even larger now, this interest. The last point is that Italian banks are still probably defining the right asset class for the market parity investment, and we are discussing ourselves in these very days because of the first real projects getting PPA getting signed and projects being built. However, also on that side, we see a strong presence of foreign banks stepping in just for the reason that they have seen that before, they have defined the asset class before, and once they have understood the differences of zonal price, the CCT, and the peculiarities of the Italian market in general, then they are ready to act. Sorry for taking these 5 minutes more, and thank you for the attention.
Thank you, Dario. Thanks for a great presentation and a great overview on the opportunities PPAs in Italy. So I think it's time to start the Q&A with both speakers. And thanks a lot, everybody, for your questions. I see a lot of questions now. So I just want to start with one that I see here. And I think I'll ask this to both of you, to both Peter and Dario. Maybe Peter, you can start. But of course, we're talking about solar market parity. So that is for the first time ever, solar projects can be built without any type of support schemes. So how important it is, considering the Italians 2030 targets and the upcoming auctions, how important it is for the next 5 to 10 years for the Italian PV sector, the support of the government. I mean, is this going to be still a crucial thing, or have we really reached a point where the targets and the auctions are not going to hinder any development of the Italian PV sector? So I'll ask it first to Peter, and then we can go to Dario.
Thanks, Leoncio. I would say over the short and medium term, the continued support of the government is absolutely essential. Italian renewables have so much ground to cover in the next decade that as much support as necessary is going to be needed, and that is against the background of lower costs and the ability for markets, given the correct conditions, to deliver high quantities of new supply in relatively short timescales.
Okay, interesting. Dario, what are your thoughts on this?
Yes, on our side, obviously, a decade is a long time. So if I'm sure that if I ask the audience their view of the market 10 years ago, it was completely different from the one today. At the same time, just trying to answering more in the short, medium term, it is clear that in Italy, the main bottleneck is, or let's say could be, on the authorization side again. So basically, where are we going to put these assets, and to make sure that the national interests are correctly aligned with the local ones. So that's something we are in closer discussions also directly in Rome, and I think it should be one of the top topics of the agenda in order to reach the targets.
Okay, fair enough. Thank you, Dario. Let's try to go because we have limited time. Let's try to do sort of like a flash Q&A. So I'll ask you questions and try to answer, as direct as possible. So Peter, somebody asked, why is subsidy-free solar projects in EU led by Spain, while there is not much developed in Italy? Can you point out some structural and regulatory differences?
I think that's a useful follow-on question, Leoncio. And Dario, in his previous answer, touched upon that. This is all around market conditions. It's around the barriers to entry of new capacity. Southern European power markets, Iberia and Italy, are going to have their time. I think Spain, as you've just pointed out, is a little bit ahead at the moment. But Italy may well be catching up very soon.
Okay, looking forward to that definitely. And Dario, following up also on the Spain, somebody asked what percentage of Iberian PPAs are truly merchant. The person from the audience asks they suspect that there might be an implied floor on electricity price provided by the government auctions. So, what percentage of Iberian PPAs are
Repeat
truly
the
merchant?
answer.
Sorry?
It was a bad connection. Can you please
Oh yeah.
repeat
So
the
somebody
question?
asked, what percentage of Iberian PPAs are truly merchant? Because the audience suspects that there might be an implied floor on the electricity price provided by the government.
No, I mean, obviously, some, I mean, I guess the person asking this question knows also well how it works, the Spanish auction. And obviously, it's important to secure, to secure the revenues before you get there, to secure actually the returns before you get there. So again, I'm happy to come back on the percentage, but it's a matter of taking advantage of the market opportunities, regardless the fact that there might be a floor on that.
Okay.
And again, it's very much the same approach that we are seeing in the Italian market at the moment.
Okay. Okay. Thanks a lot. And Dario as well. Yeah. What is the longest tenor of PPA you can discuss in Italy? Some.
Yeah,
Yeah.
we can very direct answer. So we are discussing 15 years on competitive price level for that specific structures. We could go up to 20 years, which is exactly 20,
Wow. Okay.
which is what we have also signed in Iberia.
In Portugal.
Yeah.
Okay. Okay, thanks, Dario. And sorry for being a little bit rushed, but there's more questions than time. And I ask everybody, you have the speakers' emails here in case you wanna, get in touch with them. So Peter, what are the typical land leasing costs in Italy, and how difficult is it to find appropriate land for farms, for solar farms?
The land costs in particular are not something I have to hand. That is something that I would need to talk to our solar team about. But land access is a major hurdle. I mentioned earlier about the controls over using agricultural land in Italy, and effectively that is a block on larger projects in the market, and that's where the lower costs would be delivered.
Okay. Okay. I think we're running out of time, so let's just go up on the last two questions. So somebody asked, there's still some legal lack of clarity on whether offsite corporate PPAs are allowed and free of considerable charges. Does any of you two have any thoughts on this? So let me repeat it. So the question is, there's still some legal lack of clarity on whether offsite corporate PPAs are allowed and free of considerable charges. Does anybody can anybody share their thoughts on this?
Yeah.
Yep, Dario.
Yeah. Again, very broad question. In Italy, it might refer to the physical accounting of the energy, and there might be, that there is a discussion on whether 2 points or several points, metering points, are needed on the consumption location. In general, again, just to give also a broad answer, we have seen financial PPAs to be able to overcome quite easily some of the main concerns. Again, not everyone knows how to discuss an ISDA, so a financial contract, and so there are instruments, there are tools, and I think the person asking the question was referring to this.
Okay. All right. And I think it's time for our last question because we're running out of time. So Peter and Dario, both of you, anything like if we have a discussion 10 years from now, or 10 years from now, what would we say was the main driver of Italian solar PV deployment? I remember, Dario, you were talking about the taxonomy of the different players. And I think as a follow-up to this question, I would see like what of these, I think you presented four different categories. Which of them will sort of lead the pack? So two questions. So what type of player will lead the pack? And speaking 10 years from now, what will be the main driver for the deployment of PV? Maybe Dario, you can start, and then we can finish with Peter.
Yeah, I mean, on the off-taking side, the taxonomy I referred to, I expect again the off-takers, the traders and the independent and the utilities in general to have the first big chunk of the volumes. But it's true that the 2030 targets, they are not achievable without involving also the corporates directly, right?
Mm-hmm.
So I expect in a first phase to have the utilities and the off-taker, then the traders, and then the corporates on the second part.
Okay, thanks a lot, Peter.
And I think from my perspective, I talked today about market fundamentals. I focused mostly on supply and pricing. Mm-hmm. If we sit here in 10 years' time and have a similar conversation, I think we'll be taking a much more holistic view of power markets. We'll have mm-hmm. much higher levels of renewables already embedded in systems. We have different demand on the network, much more in the way perhaps of EV demand on the system. So EV charging is a much more real issue in the market. So we'll be talking holistically much more about how those markets stack up, how they balance, and where the flexibility comes from. So storage will also be a very interesting thing to discuss. It is already, but in 10 years' time, it will be there in the market. It will become part of the mainstream.
Perfect. Thank you both. I think with that note, we can close the webinar. I would like to thank both of our speakers, Peter and Dario, for their amazing presentations and for having us all here listening to you and learning more about the Italian PV sector. I think we're all very excited to what the Italian PV sector is going to bring in the future. So with that, I would like to thank the speakers. Thanks a lot. It was a pleasure. And from my side, Leoncio Montemayor, I would like to thank everybody for their time. I hope you all have a nice day, and hope to see you soon in one of our events.
Thank you.
Thank you.